Yesterday we discussed about the debit note and credit note, wherein we understood that this is a document which is created by the supplier or the buyer for any transaction other than those for which you normally have a document. Like in case of purchase, you have got a purchase invoice. In case of sales, you have got the sales bill. In the case of payments or receipts, there are the documents. But when there is a return of goods, in that case, you generally don't have any kind of document in the form of the invoice or something like that. So for that purpose, you issue what? The debit note or the credit note. I said even in the case of rate differences, if there are the kind of things, if there are the kind of issues, even in that case, generally, the supplier or the buyer will be raising a debit note and a credit note. So let's understand that how do we prepare the purchase book or purchase return book or sales return book. Let's go through that now. So I said that we are going to prepare the purchase return book or sales return book, taking the benefit of taking the use of this debit note or credit note, which is issued by the supplier to the buyer at the time of sales return, from the buyer to the supplier at the time of purchase return. So if I prepare a purchase return book, it is basically prepared to record the return of goods purchased on credit. Why purchased on credit? Why not the cash purchases? Because in the case of cash purchases, it is generally understood and observed that when you are returning those goods, you will be getting the cash back for that. And that's why you will not be considering the cash purchases in here. You'll be considering only the credit purchase of goods. Further, in furtherance to that, remember a thing that these are prepared transactions are recorded using the debit notes issued to suppliers for return. Correct? So basically, you are going to use the debit note that you have issued. We have already understood what is a debit note and what is a credit note. So what are the posting effects? Please understand, when you are returning the goods to your supplier, the supplier becomes the receiver of benefit and therefore debit. Individual transactions, individual transaction to respective supplier account, and credit total on periodic basis to purchase return account. To the purchase return account. This is how you are going to do the posting of your purchase return book. This is how you prepare your purchase return book. I hope you have been understanding this. Because understand a point that these subsidiary books, whatsoever we have been talking about, these all become the base for the various transactions that we are expected to bring into our books of accounts. In fact, exact reverse of this is the sales return book. Like in the purchase return book, we record the the return of goods which were purchased on credit. In the sales return book, we are going to record the return of the goods received from the customers which were originally sold on credit basis. Again, I need to apply the same logic, because if there were the cash sales, in that case, if the customer is returning the goods and if I'm accepting it, in that situation, I will generally be giving the cash back. Whereas if I've issued a credit notes, that credit note will be utilized for the purpose of recording in the sales return book. Even the posting of the sales return book will be same as that of the, reverse of the purchase return book. Now, how do we do the posting of our sales return book? I think gone again. How do we do the posting of our sales return book? Is debit the total of the sales return book periodically to the sales return account and credit individual transactions to the respective customer's account. That's what I said, that it is exactly reverse of the purchase return book that you do the posting of sales return book. Am I right? Yes or no? If anyone has any kind of doubt, can just raise it. Okay. So that's what is with reference to the sales return book. I'll just write the note on sales return book also. Sales return book to record the return of goods sold on credit prepared using the credit notes issued to customers for returns. The posting effects of sales return book. Posting effects will be what? Debit total of sales return book to sales return account or return, like purchase return is called as return outward, the sales return is called as return inward account on periodic basis, whereas credit will be given individual transactions to respective customer account. To respective customer account. Am I right? So this is about the concept of sales return book and the purchase return book. Technically speaking, various subsidiary books that we were supposed to talk about, the discussion on all those is already over, excepting the cash book. Now we shall have the detailed discussion on the concept of cash book. So let's start understanding what is a cash book. Why do we prepare a cash book? In what format the cash book is prepared? There are some issues in the connection once again. If it gets disconnected once again, then we'll directly continue on Monday because it's creating a lot of distraction. Just carrying out the activity and again it is that can be an issue. So the next point that we need to understand is the cash book. In the cash book, the basic point that we need to understand is that we are preparing the cash book for the variety of the transactions of our business. These variety of the transactions include the cash transactions, the bank transactions, or the transactions related to the cash discount as well. Now, how do we record these transactions? On what basis we prepare our cash book? This is all we are going to understand in this aspect. Because remember a point, my dear friends, that for all different types of credit transactions, you've already had the different kind of subsidiary books. In fact, I would go in the reverse way. For the cash transactions, as you have the cash book, therefore, in the other subsidiary book,